Let's go over some watch list. Dollar General, 234 fell under its 200, which is crazy that it's this far down. Let's see here. Measure from our recent highs. Let's see. Ooh, 39% roughly. That's rough. RSI is oversold. So maybe dollar cost average for a long-term position at a Dollar General. No options. Earnings were really bad. Revenue 9.3. 10 billion down to 9. That's damn near a 10% loss in revenue. But on Dollar General, what I do love about Dollar General, 98% owned by institutions. That's really a good sign. Insiders also have increased shares, so that's another stake. Oops. Target. This is one I personally. The blue line was support or resistance, whatever. Let's see. Let's zoom this out. Man, Target. Yeah, so we're back to 2020 levels on Target. What I don't understand a lot about Target is if we look at earnings, 30 billion, 25 billion, 26 billion, they really are, they swing seasonal earnings. So Target still has decent growth. I think this is too oversold personally, and even in the RSI here down where my thumb is on the blue line, it is way oversold. So we did open a position selling puts at the 128 range, which already expired worthless, which were a good thing. Another thing with Target is if we look at the feeds, most people are bearish. You want to be a contrarian. Investing in what other people don't believe in is usually the better option. When they're selling, you're buying. Let's see. Institutions, 83% owned. It's really actually good because a company I don't like, if we look at Bud, so it took a huge drop from 66. Let's do a quick estimate. 20% drop from highs to lows. But what I really, really don't like, I like to follow smart money. Oof, 6% institution owned. Nah, I'm not touched that with a 10-foot pole, honestly. Let's see here. A couple other watch lists. 3M was one more that I wanted. I did actually open a position at 100 flat, so I missed it by a little bit. But at 100 flat, I opened a position. It did sell all the way down to 92. This is a dividend king. 50 plus years of dividend payments. Now the consumers are taking a beating. Revenue of 8 bill, revenue of 8 bill, 8 billion, 8 billion. So analysts, it's funny because they have it at a low of 95, which I think is fair for the analysts on Wall Street. Operating income's gone up a tad, but their assets to liability is still really good. I don't disagree with that but this was like a 1% less position to open. Let's see. The rest is just tracking for me. That's pretty much all I wanted to go over. I'll do a quick video. Let's see, is there anything else? I guess we can look at Tyson Chicken as well, something I did buy recently, which was absolutely crushed from 96, down 53%. I did actually get this one at $48 right here, $48.54. So I'll leave a confirm, which is that orange line I just confirmed. That was our entry, and we did already claim the dividend of 48 cents per share. Let's go ahead and check on institutions. Hold 84% of Tyson, so, and that's not the only thing to look at. It is a major. I don't want to look at options charts. It's complicated. It's still under its 200. I don't see it really formulating over. This is not a crazy. Yeah, not as super happy about this. This was more of a swing play. I'm already lightening up on shares here, but 48 to 51 was a great run already. But we'll be watching here on the 25 moving average. If it closes over 52, then our next support will be, I don't know, 59, $60 is psychological level. That 200 green moving average may hit that psychological level by the time the averages converge on each other. But your MACD signal was a buy here on the, it was across here, so that was when a lot of traders probably piled in there, just from a technical standpoint. And then the S&P 500, the 500 largest companies, which this was a pattern that was not supposed to break, that did. This is why it's probabilities, not certainties. This wedge that I formed with trend lines is usually supposed to break to the downside. So what you would do is take a measuring tool, very easily draw from mouth. Now this is not a perfect, okay, so we would draw there, go ahead and save that line. That's roughly, and we would measure from, oh shoot. Bam, and that would be our target short. We would add, and you take 50% of that line roughly, and that's when you exit half of your short position. So we would have pulled a short here at 400 flat, which is funny because that's a psychological level, and roughly half is where this 345 support will run you. You'll probably have bounces there, but it didn't actually happen, which it's a rare pattern that didn't break out. But now you're running parabolic, and why this chart here is running parabolic to 428 is because so many people were putting in for a short, they got pressed the opposite way. You can check the put to call ratios, but RSI's got good gasoline there. For now, it's just a watch.